Hi everyone, and welcome to today's forex session. And thank you for your patience in waiting. I had a few technical issues on my side today, of all things. So that's the reason for the slight delay. So as I said, thank you so much for waiting. Before we start, can I just draw your attention to the disclaimer that you should be able to see on your screen? Yeah, David can see it as well. You know this is a very risky business. It can be a very risky business. So please don't even think of risking money that you are not happy to lose or you can't afford to lose. Right, let me just take that down. If you've not come along before, I run this session together with my husband David. I know he's been very kindly answering questions on the chat box. We've moved it. We usually get together at about 7:15 in the morning. What, can you hear me? Oh, you can't see my screen. It looks like I still have technical problems because David can only see the disclaimer. Can you just confirm if you can actually see my charts, or you're just looking at the disclaimer? Disclaimer only. Well, that's not going to be much good, is it? I think what I'll do is, if I pass the screen to you, I'm just going to pass the screen to David. It's only because it's a bit more interesting to look at David's charts, while I just fill in a couple of things that I want to cover, and basically what we're going to cover in the session as well. And hopefully, then we'll move back to me, and with any luck, as always, you know, with technology, you turn it on and off and it suddenly works. Yeah, I can see your screen. That's lovely. Okay, what I was saying is normally we come together at about 7:15 and we wait and we look at what's happening and we look at some of the setups that are setting up before the London Open, and then we have the London Open. And we just wanted to change a little bit because in that period, just running up to the London Open, it can be quite frustrating because you can see a really nice setup and, you know, 8 times out of 10, it doesn't follow through. There's a lot of volatility and, you know, it's all upended, etc., etc. So we just wanted to move it to the mid of the session, if you like. It's 11:20 here in the UK, just to see what's, just to sort of catch up, see what the London Open delivered, if it delivered anything. We're looking at a nice potential reversal on the pound yen. I want to also pick up where I left off last week, where we were looking at the price cycle, and we were looking at the price cycle on your benchmark chart, on a faster chart, and really how you play what you are seeing in that, on those charts, and where you are in the price cycle. And we were looking at the CSI. If you didn't, if you weren't around last week, there's the recording is up on the YouTube channels, mine and obviously Quantum Trading as well. And we were looking at the New Zealand yen from memory, darling, weren't we? Yeah, where we looked at the 30-minute CSI. It was a great setup, very overextended, both the New Zealand and the yen. And we were really waiting to see whether, you know, would it deliver sufficient range, if you like, on a faster time frame to allow us to take that reversal. In fact, it didn't. And what I also said at the time is to say, if you are facing a situation where perhaps the time frames that you use for your analysis and the time frame you use to take your trade, and you look at either side of those time frames, so you look maybe to the daily and then obviously the faster one, and the reversal that you perhaps are looking to take on the faster time frame is pretty much against the stronger sentiment in the slower time frames, well, then it's a judgment call. There could be sufficient in there to take that reversal. The quantum indicators will certainly help you, but the type of chart setup that you have to have is, by all means, you have your time charts, but you really are going to have to look at including a non-time based chart, something like a tick chart or possibly a Renko chart. And that's what we didn't have a chance to have a look at last week. But there've been some nice setups. I certainly am looking at one on cable at the moment. And by using that, the Renko, because it's not time doesn't play any part in the formation of that chart. This is purely driven by the price. It will either confirm or validate whether there is likely to be a chance to take a quick reversal, or in fact it is simply a pullback, and the dominant primary trend, which in the case of the New Zealand yen last week was very, very bullish. Now, against today, the background, of course, we have the midterm elections in the States, which are hugely, I don't think they've ever been so significant as they are this time around, because if the Republicans do lose control, certainly, of Congress, then a lot of the things that he has said he wants to do, things to do with trade, etc., it's going to be extremely difficult. So if you're thinking, well, you know, what have politics got to do with what's going on in the markets? Well, trust me, it is. And we have another session this afternoon where we're going to look at the markets, and we're just getting through the last of the earnings. It's all kind of bubbling together and coming together, and you know, there will be a lot going on, certainly today, tomorrow, and we've got the FOMC. But I've noticed on the calendar, it's actually on Thursday. I think it's probably to do with the elections. So that's what I want to cover. I've also got, I'm also going to use this opportunity, if you'll bear with me, is I get a lot of emails from existing users, and also from traders who are perhaps thinking of investing either in the indicators or the education program, because in these sessions we do take lessons, we do take elements of what's included in the forex program, and we just sort of explain them a little bit more, just introduce the concepts to you. Obviously VPA very much detailed in the books that are on Amazon. The program carries that through to a much deeper level, but the program is not just technical analysis. The program is also fundamental analysis, how related markets impact the forex, how you should have be aware of the broader market landscape, and then there's trading psychology. There is much more to the forex program than simply, it is not a regurgitation of what is in the books. There are lots of traders out there who are perfectly happy just buying the books, and they incorporate the concepts and the principles outlined in the books, and they blend them into maybe an existing strategy, or they use them as their base methodology. That's absolutely fine. But if you really want much more of a deep dive into Wyckoff, into volume price analysis, as I said, then the program is something that perhaps you should consider. But it's not just the technical aspect of trading, it is all the other things you need to consider to become ultimately successful. And it's going to take time. You know, I wish I could wave a magic wand and, you know, put the knowledge that David and I have in our heads and just, you know, transfer it to you in the shortest time possible. It isn't possible. You do have to, you know, it's stuff you have to know, and it does take time to absorb. But once you have this information and knowledge, you have it for life. You'll never stop learning, but you will certainly understand, you know, what moves, not just this market, but all the markets as well. So I'm going to do that later on. Is that all right, David? So I'll pass over, if I pass back to David, actually, should I just pass back to me, see if it works? We'll see, we're going to try this one time, and if it doesn't, then we'll just focus on the NinjaTrader platform, and I will get hold of GTW and see why no one can see my screen. Oh, you can see it now. Okay, well, I'm actually going to shut up for a minute because I'll get David to have a word in edgeways.
Thank you, darling. Hello, everyone, and a very warm welcome wherever you are in the world. I have to say it's pretty cold and damp where we are in Hampshire at the moment. Nice to hear it's nice and sunny in Kimbolton, David. It's you can sense some sunshine down here. Sorry about the technical problems. If this is your first time along, as you've already seen, we flip-flop between Anna's charts, which are on MT5, which is a terrific platform. It's the sister platform to MT4. If you're on MT4 and you have some of the quantum indicators or are thinking of it, you can certainly switch between MT4 and MT5 through the user dashboard. It's very easy and straightforward to do. MT5 is a fantastic platform. The reason it's great is because not only has it got the same look and feel as MT4, but it also opens up this much broader array of time frames, which you can see down the left-hand side there on Anna's chart, which you don't have on MT4. So you get a whole raft of additional time frames to choose from. MT4 can be a little bit restrictive in that sense. And in addition to that, you've also got a multi-asset platform where you've got all the other indices, commodities, and stocks as well. So I would urge you, if you're on MT4, take a look at MT5. Increasingly, it's becoming available. because the brokers are now taking it on board because MetaQuote's made some big changes to it last year. And that was really what was holding it back. Whether it will ever replace MT4, who knows? MT4's got such a vast user base, it's hard to see it. But anyway, I've just switched over there onto the currency strength indicator. You can see there on the Renko at the bottom left going back to the CSI. Blimey, making me go dizzy. There we go. There's the move we've seen in the pound so far, and that's what you were seeing reflected also on the pound yen chart, was on the NinjaTrader side. And if you've never used Renko charts before, again, it's something we show a lot in these sessions because you can use them on their own, and a lot of traders do indeed, but the way we tend to use them and the way we would suggest you use them is as a blend between a non-time-based chart and a time-based chart, because what the Renko chart does in taking time out of the equation and moving to a fixed block size, it really does remove a lot of the noise of the market. So you can either use it as an entry mechanism, you can use it as a helping you to stay in mechanism, or indeed you can use it to help you to get out. The indicators work in exactly the same way. The trend dots work great with it, as you can see. The pivots work great. The support and resistance works brilliantly on it, and the trend monitor. And it's just finding a blend. You're blending, obviously, multiple time scales. You're looking at multiple charts. You're looking at multiple times in the currency strength indicator. And then you're blending that with something like a Renko, which is just giving you that different perspective and smoothing out the price action. You can see there we're starting to see a tick up. Anna's got the CSI there on 3 minute. You can see the yellow line, which is the British pound. It's starting to rise. It's getting to a little bit of a pause point in the middle there, and that's offset by the dollar. Now what we've got at the moment is, and this is a 3 minute time frame, so it's pretty quick, but you can see there we've got the pound, which has been rising quite strongly from oversold, but now we're starting to see the dollar also tick up a little bit, and if that continues, where the two of them are pretty much traveling in more or less the same direction, or certainly sideways, at that point you're expecting some congestion to develop for two reasons. Firstly, because the currencies themselves are moving sideways. Secondly, because both currencies are moving sideways. And if they move in the same direction, then the trend momentum will also slow down, because there is no diverging force between, or diverging sentiment between one currency and another. The ideal is it's self-explanatory, or it's self-evident, but what you're looking for constantly is one currency which is very strong and another which is very weak. So you're constantly looking for a currency which is rising strongly and another which is falling strongly, assuming that you want to be a trend trader. And again, it's something that you need to think about. It's something you need to consider, because there are so many different approaches you can take into the trading world. It's finding what works for you. From a personal perspective, I like trading reversals. I like to look at those opportunities where a currency is very overstretched, either at the top or the bottom. And you can see the example there where we had the pound, the yellow line, which was very oversold, right down at the bottom of the indicator on this very fast time frame. And up at the top there, we had the Japanese yen, which is the magenta line, very strongly overbought, heavily overbought. Those are the sorts of regions I look for personally as a starting point, because I like to trade off reversals. So there at the top is the yen, there at the bottom is the pound. And what you're looking at there is a potential reversal, which we are seeing, and which indeed you saw on the NinjaTrader chart I had up earlier on. It was reinforced with many other aspects. I'll go back to that chart because it is quite interesting. But this is one of the things you have to sort out in your own mind. Do I want to be looking to trade reversals? Am I comfortable with doing that? Because it does require patience. That is the one thing you need. If you're going to trade reversals, you have to be patient, because they don't happen immediately, very rarely at any rate. What tends to happen is they'll get to the extreme. You'll get a congestion phase for lots of different reasons, which is all explained in the program. And then the market will start to trend in the opposite direction. But that requires patience, which, let's face it, we're not all brilliant at, and we do get impatient and we want to trade. It's very difficult to sit there and sit on your hands. In addition to that, if you're trading reversals, You've also got to allow for your stop loss positioning to be wider to allow for that anticipated congestion phase where the price action is maybe not whipsawing, but certainly moving around within a range, building a little bit of resistance, building a little bit of support, maybe trading in a channel. And then as the volume comes back into the market, it then starts to trend in the opposite direction and you've got your reversal in play. That all comes at a price, and the price is a wider stop loss. And as I say, you have to be patient. Once that reversal's underway, then you can decide to jump in onto an existing trend. Now, that may be your preferred method of trading. You may not be well aware that you're rather impatient and you don't like waiting. You want to be trading all the time. That's fine. So what you're looking for is either breakaways from congestion phases or reversals which are already underway. So you're jumping into the trend. We've got this little trend developing here on cable. You might be looking to join that now. You can see the trend monitor at the bottom there. We've transitioned out of this steep downwards trend. We've gone into the congestion phase with the trend dots there changing into the grey. Then they've transitioned into the blue, and we're now rising, not at a great pace, but we are rising nevertheless. And you can see the trend monitor has transitioned to darker blue. And ultimately, as this trend gets underway and maybe gathers some momentum, it will then move into brighter blue. And over on the right-hand side there, you've got the time-based equivalent with obviously the volume profiles, and you're looking at VPA in that respective. You're looking at buying coming in there. You're looking at stopping volume after that move. You've got volatility candles there. There's a whole raft of lessons there to do with VPA and also the congestion phase that builds thereafter. And now we're looking at various aspects, not least of all support and resistance. We've got some pretty strong resistance at one spot 30.39, which has already come into play. We've got low volume higher up on the volume point of control. So if it breaks through that level at where it literally is trading about now at 130.39, if we break through that, you've then got a decent platform of potential support below, and you've got low volume on the volume point of control above. So all things being equal, given that the volume is supporting that move, then you would expect to see a decent move up towards, where are we, 48, 49.50, something like that, up to where the R1 is on the Camarilla levels indicator. What's interesting on that, the penultimate candle that's just formed, if you look at the volume there, it's pretty weedy, it's pretty low, it's certainly well below average. And if you look over to the left and you compare that with some of the other volume that's been going through over the same sessions, you know, it's not terribly high. You've got the average line there on the volume, that little dotted line there where Anne's cursor is, that's the average line. So it's well below average. So what we're seeing right now is pretty weak, not a terribly strong response. And, you know, if you're going to jump into that trend, I think you'd probably be waiting a bit, probably for a move through 39, through that resistance at 39. And if it goes through there with some decent volume, breaks through that, and you've got some good support below, which the ceiling has now become support, and you've got some low volume on the volume point of control. So you should have fairly clear water. So in terms of a scalping opportunity, you'd be looking at 6, 7, 8, 9 pips, which is, you know, what a typical scalping opportunity trade might deliver. I'm just going to pass back to Anna.
It's actually a perfect example of what we looked at yesterday, and that is the decision you have to make is after such a steep fall that we saw here on cable. This was the it was on news actually. It was on whether it's rumour or fact that about a Brexit deal, basically. That's what pushed it lower and fast. So you have momentum building, you had down candles, you had rising volume, and then that's the sort of stopping volume that came in, as always, with the volatility candle. Then the price has retreated to within the spread of that candle, because on the slower time frame, certainly on the benchmark charts, on the benchmark, the sort of hour, the pound has been selling off, and suddenly you're presented with this opportunity where potentially on the faster charts, as we see here, this is the yellow line with the with cable, and that little move higher is really, this little move is represented on this line here. You really have to decide whether that is, there's enough in there to be able to take as I said, a scalping trade is literally a handful of pips. I'm not talking double figures here. Is it simply, you know, or is it the opportunity to perhaps re-enter to the downside, or as David said, you know, once the levels come into play and maybe it's going to go higher. In fact, it's ticking up the yellow line here. But probably the trade to be looking at in terms of the fall in the pound was possibly not against the dollar, although it was a substantial fall, is against the yen, and that's the one that David was looking at. So this is how the multiple timeframes. Now, I also had a question, I think he's in the room at the moment, with regard to the CSI. When you get the CSI and the lines, you do have the zoom function. The zoom function allows you to play around with the lines. Normally, we tend to have it zoomed up about that much. You can zoom it up even more, but it loses its, I think it loses its, I think that's too much. It's really a matter of personal preference. There is no, you know, we don't say have it looking like this, or having it looking like that, or well, probably not looking like that. I think that's just too crazy on the eye, but something like that. So it allows you to isolate. You can see what the individual currencies are doing. I mean, for example, you can actually also turn them on and off. This is what these buttons do. An interesting one is the white one, is the New Zealand, which is really just going nowhere at the moment. But then there's the RMBZ rate decision tomorrow, so that's probably why it's gone to a little bit of hibernation. And also, the other thing you have to bear in mind is you are seeing this rise in the pound. That pound is now being bought in the market in this time frame, but that's not necessarily in the pair that you may be watching, although there it is. There must be some good news suddenly come in for the British pound. It might be being bought against another currency. So you know, you do have this rotation of flows into one currency and then into another. Now that's suddenly shot up, as David said. There was no you know, reason to suddenly see that come in, but with anything to do with the British pound, if there's slightest sort of Brexit news, good or bad, then suddenly you will have a complete reversal in sentiment. And yes, the currency, oh, here we are. That's it. Because he gave the thumbs up. We might have just liked the tea and biscuits. And that's what you're dealing with if you're dealing with the British pound. And the currency strength indicator, in the sense that because it isolates the individual currency, if a currency is being bought strongly or sold strongly, it is also a reflection of market sentiment towards that currency. So it's, you know, it doesn't doesn't just fulfill the issues on a technical side, but yes, it does give you an insight from a fundamental perspective, a market sentiment perspective, to what the market is thinking about that currency. So that was quite interesting. As I said, the Renko is really the one that you need to have if you are looking to trade these opportunistic counter trend trading setups. You have to remember, you're always going to be counter trending somewhere against something. If you're even on the hourly chart, on the 4-hourly chart, at some point you will be countering maybe what's going on the month, maybe what's going on the week. So I find this view that you should never counter trend trade ludicrous, because none of the time scale frames are ever going to be in perfect synchronicity. There's always going to be some going up and some going down. So there we are, we'll watch that. And finally, on the CSI as well, the settings for the CSI, if you go into the indicator list and you go into properties, if I can get into properties, let's go. I don't think I can do it on that side. Oh, I've got it. Helps if I highlight it. There we are. That's it. Sorry, the RSI period, it is defaulted to 14. You can set it to other settings. This is just what we have found that works for both the slower and the faster time frames, but I do know there are traders who like to sort of speed it up maybe on the faster ones or on the slow ones. It really is a matter, with all our indicators, like trading itself, you have to put together a set of tactics and put together an approach. VPA is a methodology. The tactics that you pull together, the settings that you use on your indicators, that is very much what you want to do. And a lot of it is trial and error. It's just the way it is. There is no what we also practice and preach, if you like, is a discretionary approach. We have a system in the sense that we use VPA and we use our indicators, but but we take a discretionary approach to that system. It is not set in stone. We don't have a very rigid rule set that if A, B, C then happens, then we go in. No, we look at all the elements. We take on board all the information that the charts are delivering, the indicators are delivering, and then we decide whether to take a trade or not. But it is all premised on the volume price analysis methodology. You have to distinguish methodology and approach to tactics. Your tactics are going to include what indicators you're going to use, what time frames you're going to use, etc., etc. Is there anything? Is that pretty much what covered? So that was the CSI. I think I've answered all of those. And oh, one final one. Yes, somebody else emailed and said that apparently in one of the videos he'd been watching, David had said, sorry to drop you in, David, said some of the indicators were not suitable, were not even that useful on the higher time frames. No. What he said was an indicator such as a Renko are predominantly for the faster time frames. Not all indicators, you know, this is a scalping tool that we have developed. So if you're on the 4-hour chart, you might use it for your entries and your exits, but it's not developed for, it's not an indicator that you would use on the daily chart. But that's what I want. Is there anything you want to add to that?
No, well, I can add to it, yeah.
Yeah, do you want to add to it? Yeah, I'll watch the pound. Okay, and I'll flick, and I'll actually pass over to David and see. It is still pushing higher, although we have got volatility candles on the 6-minute and the 3-minute, not on the hour. So we're expecting the price to retreat to within the spread of the candle. We'll see if what else happens with the British pound.
Just going to switch screens and pull my screen up, which you should be seeing there. And I've actually got the currency heat map up, but let's just go back to pound yen. And just to pick up on what Anna was saying, the question about what I may or may not have said about using the indicators in different time frames. It's certainly true. You wouldn't use a Renko on a slow chart. It's just not designed for that, nor indeed is a tick speedometer, which is on the NinjaTrader package. It's a scalping tool. You wouldn't have it running on the daily. It's utterly pointless. So some tools are specifically for scalping. Some of them cover all markets, all time frames, and others are more specific, as indeed, as mentioned, the Renko. Obviously, tick charts would fall into that category as well. And in fact, if just hop back to the currency heat map, just looking at this on the pound yen, this is a typical trading day on the pound. This is a fact of life. If you're trading the pound every day, this is what you're going to be subjected to, and you have to accept the fact that you're comfortable with these sudden volatile moves which come out of absolutely nowhere because someone said something or nuanced, or it was a rumor or speculation, goodness knows what. It's like, you know, hand signals, like the old trading in the pit. This is going to go on for months until this is partially resolved. If it is resolved, or if there's no deal, there probably will be a deal, but you know, this is life. And if you scroll back 5-6 years even on the pound, it was one of the most measured currencies to trade. It was very stately. I think in one of the books we've referenced it as trading like Big Ben, which is the big clock tower we have in central London next to the Houses of Parliament. It's very measured. It's very metronomic. And that was the British pound. That was the characteristic. It was largely driven by the fundamental news. It wasn't particularly volatile, and it would react to the fundamental news in a way that was expected, anticipated, and it was a relatively straightforward currency to trade in that respect. You knew what you were getting. And when it was matched against the euro, for example, then it was the contrast between what was going on in Europe vis-a-vis what was going on in the UK. That's all changed, and that's how a characteristic of a currency does indeed change, and it's changed dramatically in the last 2 years, and will continue to do so. Now in maybe 3-4 years' time, it will revert back to what it once was, as I say, which is very metronomic, very little volatility, reacts to fundamental news in the way you would expect it to, etc., etc. You've always got to be aware of these things, and that's how fundamental news changes the characteristic, and that's what we're seeing right now. We've seen it this morning twice. We saw it at 10:15, and we've seen it an hour and a half later. If you weren't in that particular trade, I mean, let's face it, sometimes you can benefit, sometimes it takes you out. It's a little bit of a roulette wheel right now, and you've just got to accept the fact that sometimes if you're in a trade, it goes for you, and sometimes it goes against you. It's all about having a stop loss, because the stop loss will take you out and get you out of a weak position. What's interesting about the move this morning, first of all, you've got the volatility triggered on both. We had the volatility triggered on this one, and we had the volatility triggered on this one. There's several characteristics which are common. First of all, the move has been associated with strong volume. You can see it very heavily here, to a lesser point here. But in both cases, you've got wicks, and the wicks will obviously give you a clear signal that, first of all, the price action is going to trade back inside the spread of the candle to start with, which is what we always anticipate. When you get and you've got one over here, which actually up at the top left, which has got no wicks at all. This was, when was this? This was 6:15 our time, so pretty early in the morning, coming into Europe, which came in around about here somewhere, and the UK open is over here. So we had the volatility triggered there. As soon as you see these signals come in, it's a warning signal. The market's risen rapidly, and again, you can see on this occasion there were no wicks to the candle whatsoever, but almost straight away we trade within the spread of the candle. We've got the volume point of control here, which is building all the time. I don't know where it was at that particular point of the session. It could have been there, it could have been a lower level, could have been a higher level, but it's certainly sitting there now because we have this congestion phase build, a lot of volume, and that at that point was the fulcrum of the market, at which point the market was in price agreement, if you will. But the point is, the volatility candle there gave you a straight heads up that this was a fast move. The volume here, you've got to remember, the volume here was in Far East Asia, so at that time of day that may well have been high or normal for that sort of session period. Now we're moving into London and the US, where the volumes are much higher. When we saw this candle, we had high volume. What's also interesting about it with the deep wick, there is obviously some serious buying going on in that particular phase of price action. Yes, there's heavy selling, but somewhere in the piece, within the 5-minute period, there was some fairly sustained buying. Now, if you wanted to find out when that buying had come into that particular candle, all you have to do is go down to a 1-minute chart. In other words, you're dissecting that particular candle into a much faster time frame. You're taking 5 slices out of it, and that will tell you when the buying came into that particular candle. At what point in that 5-minute time horizon did the buying come in? Because you'll see it clearly on a 1-minute chart, because you'll see that 5-minute candle broken down into 1-minute candles. That gives you a completely different perspective. It also tells you when the buying came in. Did it come in on the 5th minute? Did it come in on the 1st minute, 2nd minute, 3rd? Where did it come in? So you know for a fact you've got some pretty strong buying coming in here simply by the depth of the wick. If that was going to continue with very strong selling, then the close of the candle would have been down here, but it isn't, it's up here. It's followed immediately thereafter by another signal that we've got some pretty strong buying coming into the market. We've got a fall to this level here, pretty much in line with the previous one, but a ton of volume under it, and the candle closes up. We then get some further buying on this one. The market sells off a little bit. We then get further buying on this one. Another deep wick to the bottom, very good volume under it. There's a sustained amount of buying going on in here. You know, that's what it's telling you loud and clear. Do not expect this to suddenly go like that. It isn't going to happen. what is going to happen is this, sideways price action. And it's what I said earlier on, if you're going to trade reversals, that's what you've got to sit through. Now this is what? This is 10.15 to 11.15 before we start to get any point at which you might start to think about getting into a move. So you've got to sit there for an hour. Are you comfortable sitting there for an hour? If you're an intraday scalping trader, you probably wouldn't be. You'd be sitting there thinking, I'll go and find something else. This ain't going anywhere. I've got to find something to trade. That's fine. That's what you've got to figure out as a trading personality. You've got to decide whether you've got it in you to sit through that phase, that hour of sideways congestion, in order to wait for the opportunity to come to you. And in addition, just move the chat box out of the way, move it up the top there. And in addition, what I said earlier on, you've got to set your stop loss a lot wider. So if you're looking at this as an opportunity for a reversal trade, and the CSI will be giving you a strong heads up because it would be very heavily overbought and very heavily oversold, as I pointed out on the CSI when we were looking at it, then you've got to set your stop loss somewhere well below this level here. So in terms of a range, you're looking at, that's 10 pips there between 40 and 30. You might be looking at 15, you might be looking at 20 pips as a decent buffer to allow for this period of price action, because you don't know at this point whether this price is going to go further down, come back again, maybe go deeper still. So you've got to allow for it in setting your stop loss. It's just a fact of life. Then we get the move higher. We start to see some decent volume. It's supportive, it's not that strong. What's interesting about this particular candle here is that where you get a reversal into what was heavy selling, in other words, the price action here is reversing into areas where you've seen heavy selling before, here, here. When you get to this one and you're looking at it, the volume is comparatively low compared with the amount of selling that was going on in these two regions. So the conclusion you draw from that is that what's happened is that the selling pressure is now diminishing, and they are always signals to look out for, because where you've seen price action in a heavy area of selling, which is here, and then you see the price action reverse into that area again, but it's not heavy selling, the volume has fallen away. In other words, the selling pressure is diminishing. That selling has been absorbed. The sellers are waning, and you're starting to see that change in sentiment at that particular point. So it's a very strong way of giving you a heads up as to what is happening in terms of the strength of the selling, or indeed the same would be true at the top in terms of buying. Is that buying waning because you're seeing price action in an area that was previously very high in terms of selling or very high in terms of buying? That is now much, much lower. So the selling or the buying has now falling away, and therefore you're seeing the potential for a reversal to take place in due course. We've got exactly the same situation here. We've had the volatility, deep wick to the upper body, a lot of volume under it. There's a decent amount of selling in here. There's more selling going on here because we've got a wick to the upside, but the volume's falling away. And really what is going to dictate whether this move is going to move any further or not is really the other aspect of VPA, or one of the other aspects to VPA, which is support and resistance. Because up here, just move the chat box away, sorry. Up here at 147.85 and 147.90, you've got these very strong areas of price resistance overhead with this red line and this blue line. They are on the accumulation distribution indicator on NinjaTrader, but they work in exactly the same way as do the indicators on the MT4, MT5 platform in terms of how they develop these regions, because it's purely based on price. Those levels are calculated by the indicator the number of times that such an area has been tested or retested. And it's exactly the same on MT5 and MT4, where you have a solid line where you've got some very strong resistance or support, and a dash line where it's less strong. Here it's denoted with the thickness of the line. So the thicker these lines are, you can see down here, these are very light, they're very thin dash lines, so the support resistance regions here are a little bit thinner. As we get up to these regions, these are pretty strong. And if you look over to the left of the chart, you can see the reason why. We've got plenty of price action around this area. We've got more of it around this area. which is going to hinder progress if this market is not going to continue higher. In terms of getting into this now, given that we've had the volatility, once the price action has cleared away from that volatility area, then it's an opportunity to think about jumping into that particular trend if you're comfortable with what everything else is telling you in terms of related markets, in terms of different time frames, in terms of what's going on the CSI, what's going on in terms of the matrix, etc., etc. You can see here we've had the full transition on the trend monitor from bright red, where we had the big fall here. Then we move into the transitional colors of the darker red and the darker blue as we start to move into the bullish phase. We've had the volatility. The trend monitor is now transitioning through to bright blue. The trend line is rising nicely. And it's really just a question of whether we break through this region. If we break through this region with decent volume, how much opportunity have we got left? Well, this is the next factor which brings you into the question of whether you're prepared to take this opportunity or not. It really depends on what is ahead of you in terms of price action. Because if you're looking at the chart in different time frames, you're seeing a lot of resistance ahead, you're seeing maybe high volume nodes ahead of you, lots of congestion, etc., etc., then if that opportunity is only going to deliver you a handful of pips, is it something you want to take? The answer is probably not. If you see clear water above, there's very light volumes on the volume profile, there's very little in the way of support and resistance ahead, you've got an opportunity, that's a different decision. So you're constantly looking at that in terms of the risk-reward profile, in terms of whether you're prepared to take that position or not. So there's lots of good lessons there in terms of the pound yen. Let's just go and have a look at the one thing I just wanted to head over to, the currency heat map, which is really interesting at the moment. And it also comes back to this issue of indicators for different time frames. And the currency heat map is certainly one for slower perspectives, because whilst it gives you all the heads-up information on every single time frame from the 1 minute right the way through to the 1 month here, and whether the particular currency pair in the ranking ladder here on the left is bullish or bearish, what it also gives you in the ranking ladder is the ranking in terms of weighting, because these pairs are ranked by weight of bearish or bullish sentiment across the time frames. You wouldn't expect, for example, a monthly bearish chart to have the same weight in terms of ranking or influence as a 1 minute. It just wouldn't make sense. So what we've done is we've weighted these according to the time frame. So the slower time frames will carry more weight than the faster time frames in terms of calculating the overall ranking for these pairs as to whether they are strongly bullish or strongly bearish. Now, the speed these move is very much slower than on the currency matrix, for example, because they have this weighting element. And what's interesting at the moment is, as you can see down at the bottom here, we've got the New Zealand dollar, we've got the Aussie dollar, and we've got the euro dollar. And up at the top of the chart, we've got the dollar yen, we've got the dollar Swiss. Dollar CAD's a little bit lower down here. But certainly in terms of these three, they are looking very, very overextended in, to use the same terminology of currency strength, if you will, where you're looking at the extremes for potential opportunities for a reversal in sentiment. And given that we've got these three at the bottom here, then certainly, they are opportunities, but over a slower time frame. You wouldn't be looking at these to move very much on the day, but certainly if you were looking at possibly for sort of 2-3 day opportunity, or maybe even longer, you'd be looking down the bottom here, and you'd be looking up the top here. And once this bullish sentiment here, for example, on euro dollar, where we've got a little bit of bullish sentiment up to the 10 minute, 15 through to the hour is still bearish. We've got a little bit of bullish sentiment coming in on the 4 hour, and still relatively bearish on the daily, weekly, and monthly. But as you can see on the daily, it's only -3. So there's not a lot of travel before the euro dollar starts to look a little bit bullish on the daily time horizon. And you only have to start to see these filling up. You can see on the Aussie dollar here, this is pretty much green right the way through to the daily now. And the weekly, obviously the monthly is still pretty bearish because it's been hammered. But you can start to see that bearish sentiment come in. You can start to see it coming in here on the New Zealand dollar. So for a longer term, and I use that in inverted commas, if you will, for a slower term trend, or if we swing trader, I don't like the terms personally, but I'm sure you know what I mean, then those are the sorts of opportunities you would be looking at in terms of the heat map perspective, and certainly looking at the extremes for opportunities for either buying or selling. And the same would apply obviously at the top, the inverse of the dollar yen and the dollar Swiss. Let's just go back to the CSI and see what's going on. This is on 5 minutes, so we've still got that buying of the pound up here, the yellow line, and that is matched by the selling of the magenta line here. Just move the chat down a little bit. There we are, the magenta line there, which is falling nicely. And as I said, I mean, you're really spoiled for choice there because you've also got the pound. So the CSI is always the starting point, and it's the point that you can actually look at, and you almost don't need to go to the charts because you can infer from this exactly what is going on in terms of the chart on a 5-minute time frame or a fast time frame. Pound's rising strongly, so we know the pound yen, we've got a decent trend there. Equally, I could tell you without looking that on the pound dollar, we've got the pound here rising strongly. The red line, the dollar is falling very strongly. So you've got that divergence of force, which is driving that pair in a strong trend. And as I said before, if you're a trend trader and you want to get into a trend, that's what you've got to decide. You've got these crossover points, the trend is developing nicely. The quid pro quo is that if you're jumping on an existing trend, first of all, your stop loss is going to be much tighter, so the money risk you're putting on the table can be much lower. But that comes there's always a quid pro quo, and the quid pro quo is that you're getting into a trend that's already underway, so you've given up some of that trend. And the guy or the girl who's got in at a reversal, they've put more money on the table, and they are now benefiting because they got in early. There's nothing comes free in this business, in this trading world. It's all about risk and return. If you put more risk on the table, you'll make a bigger return. If you put lower risk on the table, you make a lower return. That's really all it's about. And you've got to find what your comfort level is. You look at the Canadian dollar here, that's falling pretty strongly too. And again, against the pound, don't need to look at the chart to find out what's going on there. We've got the euros now kicking up pretty strongly. So if you start to look at something like a euro Aussie, if that euro carries on climbing and the Aussie dollar here carries on falling, they've crossed over. So you'll start to see a trend develop if that continues, and so on and so forth. And that's how to use it. And obviously you then use it in different time frames. So we scroll down to a 15-minute time frame. And what you see on the 15-minute, if that reflects what's going on the 5-minute, fantastic, happy days. Here you've got the pound rising strongly. We haven't even crossed here on the 15, so the yen is selling off very strongly as well. That's great news. The two have crossed here. The US dollar didn't actually make it, made it just over halfway, and now it's rolled over and it's selling off pretty strongly. So cable looks pretty good too. Down at the other extremes, we've had this very strong buying in the New Zealand dollar here, which is moving up into overbought territory. You've got the Canadian dollar here, which is flip-flopping around in oversold. And this is what I meant about being patient. If you've got into a reversal position down here somewhere on the Canadian dollar, which was what, 10.15 or so, sorry, on the Aussie Canadian, for example, or maybe you're looking at the New Zealand CAD or whichever option it may be, you've then got to wait for this period to elapse before that actually moves. You've got to wait for this to elapse. It looked as though it was moving there. Now it's kicked back down again. You've still got to be patient. I can guarantee you one thing. At some point, that currency has to move. No currency stays overbought or oversold forever. It doesn't happen. This is a market of mean reversion. In other words, these currencies are moving constantly from overbought to oversold and back again in every single time frame. You just have to be patient and pick them off as they come along. But this is what I meant. You've got to be patient. Wait for this buffering to carry on. Set your stop loss wide. Wait. It will come. The trades will come, but you have to be patient. Let's just go and see what's happening on the array. The array's on 5. I've got this on. I've got the yen isolated out here. Just put them all back on again. Let's just go to the dollar. See what's going on the dollar. Yeah. Okay. Let's just go back to the yen. There we are. We've got the CAD yen down. This is on 5, so again, different time frames. Just waiting for that. CAD yen is the weakest at the moment. We've got the euro yen here, dollar yen, Swiss yen. Bit of a mixed bag in terms of what is going on in terms of the yen at the moment. Ideally, what you want to see, obviously, on the array is you want to see unanimity. You want to see everything in alignment. You want to see all these pairs either at the bottom or moving up towards the top where they're all aligned, so that you know the sentiment for the yen at any rate is universal. And what we're seeing right now is some divergence, because we've got some strong buying in the pound yen, which you can see here. This is on 5 minutes, so it's continuing up. It's moved above the midpoint here. It's being joined by the New Zealand yen. Down at the bottom of the ranking ladder here, we've got the CAD yen. So we've got, there's divergence on the yen. What this is telling you is that if you're trading pound yen or New Zealand yen right now and you're long, it's not actually what is going on across the market per se, because here you've got in these pairs at the moment, at any rate, certainly down in the CAD yen and the dollar yen, you've got some decent buying of the yen, and in the euro yen also. But then in the pound yen and the New Zealand yen, you've actually got selling of the yen. So sentiment for yen is not universal. The flow of sentiment, the river, if you like, of sentiment is not universal. It is mixed, which means if you're trading any one of these pairs right now, you're trading with a little bit more risk, because the market is not aligned in one direction or the other. It's aligned in the way it is on the various pairs, which is fine, but that does not mean that everyone in the market is either buying or selling the yen. Just go over to, this is the yen index, just get a sense of what is going on in terms of the yen index. It's selling. This is the yen index on the bottom, and at the top here we've got what I've got this on. I've got this on euro yen. This is on 5 minutes. So there is weakness in the yen, and it's starting to roll over, and obviously that is helping with a pair like the pound yen, for example, where you've got some uplift from rumor, gossip, whatever it is. But the fact that the yen is also starting to roll over is going to be helping as well in that move. And ultimately, of course, if this is strong enough, then that will drive through into those pairs at the bottom, the CAD yen and, can't remember, I think it was the dollar yen and one or two others down the bottom there. Just going to move back to Anna.
While David was going through with the pound yen, this was really happening on cable, and it has actually managed to pull out of the two volatility candle. Volatility can, when you see volatility, you say, oh, don't run away with the impression that because the price retreats to within the spread of the candle, that's it. It's a reversal. No, it's simply. What happens with volatility, you get a lot of momentum, and that it's like an elastic band. It stretches very, very quickly, and then it has to have an element of snapping back, and that's all it is doing. Now, sometimes it does reverse, at other times, as we see here, it's simply reversing back, pausing, and then it's got to decide whether the price carries on or does reverse. It can do. You can use volatility in a number of ways. You can use it if you are already in this trade, based on, as I said, looking at the Renko, and certainly on the faster charts, you really have to consider using some kind of non-time-based chart. We happen to use Renko because we developed it for MT5. It doesn't come as standard with MT5. It comes as standard with TradingView and some of the other platforms, and even with NinjaTrader. But there again, we've tweaked it, and we've come up with something called an optimizer that tells you the optimal settings to use with the chart. And you can see here, it just absorbed that volatility, and it is still going higher. So it's there as it is a pause. If you some traders like to say, that's it, I don't want to take the risk, if you like, of knowing that if it is going to be a reversal, I'm quite happy. I'll use the volatility, if you're in a trade, to actually come out. That's fine. And the other way of looking at it is once the price, if it's going to carry on higher, it goes outside beyond the volatility candle and carries on. Well, that's another way that you can use it as well. But with as I said, if you have something like, if you've got the CSI, look to the CSI on the faster timeframes, because once the currency and currency pairs are at the extreme, that is also giving you a heads up as to whether, if you're not in, to re-enter. If you are, you want to put an extra micro lot on, or whatever contract size you use. You can use it in a number of different ways, and what it does, it takes the Renko helps to take the emotion, takes the sting out of volatility. Volatility is when you suddenly see this jump in the price action, it's very disconcerting, extremely disconcerting. Sometimes it looks much more bigger than it actually is. It can only be something like 5, 10, 15 pips. If you're on something like the pound yen, it can be hundreds of pips, and that really is disconcerting, especially if you're on the wrong side of the market. But having something, as I said, like the Renko here, whether you use the ATR version or you have a fixed brick size, that's entirely up to you. That's what it's designed for. It's aimed at smoothing out these as I said, the volatility. And is there any reason to come out of this? No. Well, it's only 12:15. I know New York is coming on stream fairly soon. We're always talking about crossovers. Something you have to be aware of if you're intraday or day trading. And this is where you look at support and resistance, and you look at all the other elements that make up volume price analysis and technical analysis generally. So you've got the lines up here. Let's have a look. Where is it? 30.82 is a natural target, if you like. It's a natural objective, because that's where it came off the first time. This is actually where it came off the second time. This is actually a nice little setup here. It tested it, came away, tested it again, and then came away. And once it broke through there, off it goes again. Probably helped along by some by some kind of news as well. Excuse me. Right, I'm just going to pass over to David.
Just going to switch screens very quickly. There we go. I just wanted to show you on, this is the other immensely powerful indicator, which is the currency matrix, which we don't pull up as often as we should, but just to give you an idea of the sentiment towards the British pound. And this is really what you want to see. This is the currency matrix on 5 minute. Works exactly the same way on MT4 and MT5, and it's pretty much perfect. You've got the pound pairs all ranked where they should be. You've got all these 6 at the top here, and you've got the inverse, obviously the euro pound down at the bottom, because the pound is the counter currency on that particular pair, which is where you want it to be. So what that is telling you loud and clear right now on a 5 minute time horizon is the market is buying the British pound. And you'd have this on 5, you'd have it on 15, whatever time frame, 30, whatever time frame you are trading, because it tells you the universal sentiment towards the pound. So if you're trading a pound pair right now, you can be assured that everyone in the market that matters is buying the pound for the time being. I just wanted to highlight it because it just makes the point so forcibly. Just going to pass back to Anna because we need to wrap up and run along.
Darling, that's lovely. Right, I'm just going to keep, as I said, watching this. We are back later on this afternoon, but at 3:15. Yeah, we've got the US after the US market has opened. That should be a lot of fun. I'm going to be looking at the General Electric again, one of my favourite stocks at the moment. I think, do you know, it's down to $9. Wonderful. It's incredible. Somebody asked us a couple of weeks ago. They said, "Oh, it's in it's end of the accumulation phase." I said, "No, there's lots of downside to come." The VPOC was at something like 14. We said, "No, plenty of downside yet." I mean, it could go to 0. It's got all sorts of problems. The GE. I mean, you would never think such a venerable stock has absolutely been trashed. So it reminds me of Marconi. Do you remember? Yes, it's not one of our better picks, but no matter. There we are. Okay, remains for me just to thank you so much for coming along. Just very, very quickly, if you've the indicators, quantumtrading.com. I just want to bring over the site because I know we have questions about the indicators, but where are they? Here they are. For MT4 and 5, it's the same for NinjaTrader. Why have I lost mine? Okay. And if you go to videos here, even if you're perhaps interested in knowing a little bit more about them, if you go to the videos section of the site, there we are, there are a ton of videos on all the individual indicators, and it's just the CSI one. And you can see here, this is all recorded by David. There we are. They're very short, and it just explains about the indicator, possibly how to use, some suggestions. And, so that's where you will find all that information. You can just buy one. We always suggest people, if they're going to buy any indicator, is the currency strength indicator, you can buy a discounted bundle, or you can buy the complete package. It's for a lifetime. You get all free upgrades to the indicators, and if you buy the package, whenever we develop a new one, it's automatically added to your package. But you also get a 7-day money back guarantee. We're always on support 24/7, 365 days a year, and you can transfer from platform to platform. The actual cost, the actual full package cost, is $894 for MT5 or $1197 for Ninja, because Ninja's got slightly more indicators than MT4. This is where we are at the moment. This is the actual program. Now the program price, those are the prices, but it includes the indicators. So if you've already bought the complete package and you think, yeah, I want to know a little bit, I want to add to I want to invest in my education of forex. As I said, it's not just the technical analysis. It is a deep dive into VPA, Richard Wyckoff, but it is all other elements that you need to know for forex trading, which is fundamental, related markets, mechanics of trading, and the all-important psychology of trading. And that price there includes the package. So if you've already got the package or whatever you have, you will always be credited with whatever you may have bought. And it's over 50 hours of video and video podcasts. It's got 13 PDF downloads. We've actually got a VPA chat room, which you're more than welcome to come along and join us. David and I pop in there. We've got forex traders in there. We've got stock traders. It's really volume price analysis, but there's a big forex element as well. There are more experienced traders, new traders. It's in this business, we really do have to learn from each other. But if you want more information on the education, there is a dedicated site, quantumtradingeducation.com, or you can drop me an email, anna@annacooling.com, or you can email David at quantumtrading.com. As I said, I do have a number of emails people have sent. They want to know a little bit about the other program, which is understandable. It is an investment. It's it's not there's obviously the financial aspect of it, but to be honest, David and I believe we have put something together that will stand you in good stead for however long your trading and investing career is going to last. Anything else you want to say, David? No, that's it. Thank you. So, as I said, thank you so much for coming along. And if you're coming this afternoon, that's great. If not, we will catch you next time. Take care.